Good morning, everybody. We are back. Sorry for that technical difficulty. I am here with Mr. Flanagan himself. Steve, how are we doing today?
Doing good. Very volatile markets, and then all of a sudden it goes flatline.
Yeah, we've seen definitely the markets moving overnight. Um, it's definitely a stock picker's market, in my opinion, today. Earnings reports are moving, things up. We were talking with Steve. For me, one of the bigger takeaways also has been you got to fall into that sort of perfect level on your CapEx expenditures. If you're not spending enough money versus AI, no one wants any part of you. And if you're spending too much money versus AI, everybody thinks that you're going to go out of business, it seems like today.
That's right. And as you said, a stock picker's market. This is a great market in all of the financial markets because you've got such type of volatility. And when the game begins to get amped up like it is in the markets today, whether it's a tweet, this tariff, whatever, when it gets amped up like this, everybody comes to the table to play. And so all the machinery is operating at high speed. So, as our retail traders, we've got to be very nimble here. We have to understand that when these guys go to sell, when we go to sell our 100 shares, they're looking to sell 10,000. And when they
Absolutely.
do that, it's all or nothing. So
Yeah.
that's what's really beginning, because liquidity begins in these type of markets to begins to pan out a bit. It's not as when a slow market, everybody moves into the top of the price. When the markets get volatile, all the liquidity begins to back off again, and that's why you get these sharp moves. But it's a great market to trade in, that's for sure.
Absolutely. So DXY is cooling down a little bit here. What we're starting to hear for the first time, at least what I feel I'm hearing for the first time, is a lot of talk about King Dollar not necessarily being the best thing for us right now.
Amazing how the tune can change in 24 hours. Actually, you've got to have perspective if you're looking at the dollar, and the dollar value right here, in my estimation, in a longer term view, this is nowhere. I think you could easily, the King Dollar scenario is definitely, in my view, intact. And we're right back at my zone where I kind of thought just 48 hours ago we were saying, well, if it gets down around 107, that's where you want to be buying it. And next thing you know, you're punching in a high of 109.88 in the
Right.
24 hours. We're right back in the buy zone. 106.60, 107 the figure. This is the area you buy. In my estimation, there's no question that there is no other game in town. The dollar will continue to go up. And perhaps that's not a bad thing for the rest of the world that is going into a crater here because their currencies are getting cheaper.
Right. But, our trade imbalances are already starting to, be one of those, hot topic points that we're doing it. The US dollar just continuing to keep on going would give us some more headwinds there. We've seen, you called it when it came to both the USD CAD and the USD peso, what to look for that explosive move to the other side when, talk of tariffs released. How low do you think we can go here on some of these?
Well, dollar CAD right back to support 146, 60, 80 was that big point we talked about. We blew up, hit a high of 47.95. And ultimately, the support could go down as low as 141, 40.70. But right here, in around 142.75, I begin to look and nibble again to buy. I'm watching the dollar index. That's going to be my key. And I think a 107 area, just below 107, that's the signal I get that I am in a very safe buy zone. And so dollar CAD, 20 to 30 points from here begins to where I look to begin to nibble back in. MEX on the MEX hit a high of 21.29. Amazing.
Yeah.
We're back in the zone of 2002 is that big level of support. 2088 is the big resistance. You're right in around 2068. MEX has got some issues outside of the tariff talks and everything else. And again, it's not tariff wars. That's what I was trying to emphasize on Monday. And 15 minutes after we talked, boom, Mexico came in with the agreement. It's all about fentanyl and immigration. That's all that was all about. So I think Mexico domestically has its own issues at 10% interest rates. They're highly restrictive, and they've got to start to stimulate their domestic demand. So I kind of think in around this 20.5 level, this is a good base of support where I'd be looking to nibble back in to a long dollar MEX. Too many people are long MEX because of an interest rate, so the risk in dollar MEX is higher.
Okay. I think we got to talk about the sterling, right? Isn't Bank of England up on deck next?
Next up is Thursday, Bank of England. They're presently sitting at where are we? 4.75%. They missed the opportunity to cut the last time. Numbers are still looking lower and lower. The weight of their inaction is falling upon the populace. Hence, if you look at this the new government in power rapidly losing, the support of the people, Bank of England, the pressure is on them now. They are readily expected to cut 0.25%. I still would be looking, on the outside at 0.5% for Bank of England to play a catch up here, but 0.25% is baked in.
Okay. What else are you watching so far this week? Anything else?
I still love the yen. We talk about the dollar yen. That was always my number 2 currency. We hit a low of 152.50. Very sharp move down. Which I think underscores to me the risk in the marketplace of people that are short yen on the carry trade. We're presently around the 153.0510 zone. I show good support at 52.5. I did expect us to see.
Just so you know, it just dropped through that. We're seeing a big drop here in the yen as we're speaking here. Last 6 minutes, it's dropped down 152.35.
Okay, so this is the point. The risk is that there's too many short yen positions. Yeah. There is good support, 151.70, 152. We talked about that on Monday. The top side, 154, is a great opportunity to be long of yen. You just have to pick the currency. Right now, you've got a good move in the dollar yen. I like, at this point, maybe to be short the euro versus the yen as this begins to get a little sticky area. But the risk is that there's too many positions short yen in the marketplace, and Japan is on a rate hiking cycle. So They are at 0.5%. The interesting thing here in the currency land is now, once we get through Thursday, we fall into this area where anything can happen, and people, all the big funds, have to readjust these global portfolios, which are in the trillions, because you don't get the next meeting outside of the RBA, Australia, which will also have to cut on February 18th. We don't go until the first week of March.
Yeah, we have a long delay.
A long haul here.
Yeah. What's interesting is, we looked at the euro, not the euro, the yen dollar and how stable that is. The yen euro has a lot more movement to it, huh?
Yes. Euro yen is a very actively traded cross pair, as is the sterling yen, Aussie yen. These are, other components of the yen play here. Euro yen is one that often when we look at the dollar yen, we can, play a little catch up by looking at the euro yen and still catching a very sizable yen appreciation. We don't have the ECB meeting until March 6th, which is at the forefront of the next central bank meetings. Another cut there is beginning to open up these interest rate differentials that we've been talking about, which is why I still like selling the euro dollar anywhere that we can get close to 105, because that is going to continue. Those are the tectonic plates that move, and the euro dollar is 54% of the dollar index.
Right.
So that's why I'm watching that carefully.
Absolutely. One thing I'd want to ask you too is we haven't really talked about China the last couple of days or weeks. I think they came back into the news. I sort of said to Steve, today, I do think that is where a trade war is brewing. Might not be we might not be the ones firing the salvos there. It looks like they are ready to fire salvos.
Yeah. China's got, I don't have the date, but they've got a big economic forum or hubbub, with all their people sitting down and deciding the fate. China is slipping they're in a recession. They are looking to slip into a deflation, following the steps of the Japanese. Now, funny that I say deflation in Japan, because the Japanese economic minister came out today and he said the government's main focus now is to eradicate the deflationary mindset that's in Japan. They fought that for 25 plus years. China slipping in, their rates are at 3%. They've got to start adding some significant stimulus to their economy.
Absolutely.
Because they've got to grow north of 5% in order for the wheels to keep turning.
Without a doubt, I just think that's the one that's going to be interesting to watch on the geopolitical level. They're obviously, when it comes to Mexico and Canada, we definitely hold the heavy hand without a doubt. When it comes to China, it gets to more level field, when it comes to that. And especially as Trump alienates some of these other countries, China seems to be ready to step into that void if they have that ability. We saw it work a lot in Latin America, and we're now trying to get out of that from the Biden administration, who stepped away from our partners in Peru and the west coast of South America. So, I'm hoping to see that sort of reverse course and us try to take the lead back there, especially in Latin America.
Perspective is everything, and China no longer has the money to be able to do the things that they would have liked to done. Stepping into voids that leave they don't have that ability anymore. Their problem is domestic, and that's beginning, because that crumbles their power.
Right.
And so their attention has to switch domestically, and the tariff war between the U.S. is going to force that hand. And that's going to bring them back out of that world. It's all about the economics of the day. That's the new U.S., right? The announcement on the Gaza. It was a classic Trump, throwing out that we'll build the Riviera in the Gaza. It's all about a signal to the world. War has got to stop. 50 years of what we've been doing has accomplished nothing. And I think with China, the tariff war that is probably going to build, it's all going to be about getting to the table and saying, listen, this is a great world. This is a great place to be. We've got a shared responsibility. And I honestly am quite positive about the economics of, we talked about this, Howard, several weeks now. This is not about January to March. This is about March beyond. And in this 3-month period, this is where you've got to begin to look and positioning. And my thought, when people are suspect of King Dollar, this is the time where you're beginning to get yourself positioned, because the King Dollar scenario from March, April on out is going to really begin to surge.
You would have to expect, with all the revenues, all the investment being done on AI data centers, all the foreign investment coming in, that it's just going to push that up. So I can't argue with that at all. King Dollar looks like it's here to stay. The key is managing those rates. It does look like rates are starting to come down. I saw Barkin today said, we're almost at 2% inflation. We got to be looking now at March at a rate reduction, right?
Right. You've got Europe saying that they are actually restrictive. You had Powell even saying that the U.S. is restrictive. Okay, I get it if you're inflation focused, but if you're going to look out the front window and drive the car, you can see inflation throughout the world is coming down. Okay, tariffs, everybody said tariffs are going to increase inflation. Guess what? They didn't happen.
Right.
So, you're back to the scenario where inflation is coming down. And, if you look at the recent releases that are out in CPIs and PPIs throughout Europe, throughout Asia, they're going down. So the U.S. is going to have to continue to cut rates. I would actually argue that this year you could probably see 2 to 3 cuts in the U.S., but it's the rest of the world that is going to be cutting. The U.S. will be forced to cut. Otherwise, this king dollar scenario is just going to roar.
Absolutely. If rates don't come down and everybody else does, we see that tectonic plates move, and all of a sudden those fishing rods go to the other side of the boat for sure.
Yep.
Any other takeaways you got for us before we call it a day here, Mr. Flanagan?
That's the big one. I still want to stay focused on Japan. They're making an ambition goal to boost minimum wages. The government is really trying to eradicate that mindset of deflation. So Japan is an area that I think if you see dollar yen punching back up into the 155 level or higher, that's a great opportunity to probably look to get a long yen position. If you don't like the dollar, the euro, the sterling are two obvious ones to go with.
Awesome. Thank you so much, like always, for bringing all the news that happens first when it comes to currency. We will see you again on Friday. Thank you so much, Mr. Flanagan. Quasar Markets fans, we will see you back here at 12 o'clock with Agnieszka Wood, our trading mindset coach, and then at 1 o'clock with Scott Bauer and Prosper Trading live from the floor of the Seaboat. Thank you so much.